Money. We use it every single day, right? But have you ever, really stopped to think about it? How this simple concept could be powerful enough to build up and then tear down some of the world's greatest empires?
Yeah, it really all boils down to this one big question. How can a simple piece of metal, a coin, actually build an entire empire? We're talking sprawling territories, huge armies, the whole shebang. So let's dive in and break it down.
Well, the answer starts with something that was, for its time, a truly revolutionary piece of tech: standardized currency. And look, this wasn't just about making shopping easier. No. Think of it more like the operating system for a whole imperial economy. It created a common language of value that would, literally, change everything.
Okay, so if you want to build an empire, you've got to have large-scale trade. It's not negotiable. But back in the ancient world, trade had this one massive roadblock, and it all came down to a single word: trust.
Think about it. With bartering, it's all personal, right? I have to trust you, and I have to actually want whatever you've got. It's a hassle. But standardized coins? Whoa, that completely changes the game. All of a sudden, it doesn't matter if I know you. The coin has a value that we both agree on, guaranteed by some authority. The trust isn't in the person anymore. It's baked right into the coin itself.
And here's the magic. Once you figure out how to solve the trust problem between two strangers in a marketplace, well, you can scale that up. You can solve it for millions of people across a vast territory. And that is how a simple little coin becomes an incredibly powerful tool for empire building.
Let's look at the Roman Empire, a perfect example. Their silver coin, the denarius, was basically the economic glue holding the whole thing together. I mean, a soldier getting paid way out in Britain could send that exact same coin back home, and his family could spend it in a market in, say, Egypt, no problem. It's this one simple, powerful idea that made everything, trade, tax collection, even political unity, possible. And this principle didn't just work within an empire. It worked between them, too. Think about the Silk Road. You've got a merchant from Persia meeting a merchant from China. They don't know each other, they don't speak the same language, they don't need to trust each other personally. All they had to do was trust the value of the coin they were trading. It's incredible. A trusted currency was like the ultimate icebreaker for international trade. But, success always brings new challenges, right? The very thing that made trade explode, these physical coins, was now becoming a bottleneck. I mean, just try to imagine moving your entire life savings around in heavy, clunky sacks of metal. It was slow, it was expensive to guard, and man, was it dangerous. You were a walking target. So, what do people do when they face a problem? They innovate. These physical limits of lugging around coins led directly to the next massive leap in finance, the birth of banking. And it started out so simply. You had goldsmiths who basically had the strongest vaults in town. So a merchant would drop off his gold for safekeeping and get a paper receipt for it. But then, pretty soon, merchants had this aha moment. They realized it was way easier to just trade the paper receipts themselves. And just like that, that piece of paper became a form of money. Why? Purely because everyone trusted that it stood for real, actual gold locked away in a vault. This core idea just kept evolving into more and more sophisticated tools. The Romans, for example, had an early version of a check. Fast forward to medieval Europe, and you get the bill of exchange. This was a total game changer. It let a merchant in, say, Venice, pay a supplier all the way over in London without a single coin physically making that long, dangerous journey. Finance was becoming abstract. Okay, so now we're getting to the real heart of the matter. The state, the emperor, the king, whoever's in charge, they controlled the creation of money. This gave them an unbelievable amount of power. But as this quote points out, with that power came a huge, and I mean huge, temptation. And this is the core dilemma, the central conflict that has just played out over and over again throughout history. The very same authority that promises this coin is worth X is the only one with the power and the temptation to break that promise.
There's a name for giving in to this temptation. It's called currency debasement. And the idea is deceptively simple and incredibly destructive. You take a coin that's pure silver, you melt it down, mix in a bunch of cheap metal like copper, and then you stamp out 2 or 3 coins that look just like the original. Boom! You've just created money out of thin air. But what you've actually done is destroy its real value.
So why on earth would any ruler do this? Well, because it was the easy way out. Think about it. You need to pay for a massive army. The right way to do that is to raise taxes. But guess what? Nobody likes paying taxes. Debasement, though, that was like a stealth tax. It was a way for the state to get the cash it needed without the public really noticing, at least not right away.
Let's go back to Rome. Around 60 AD, during a period of incredible stability, the denarius was something like 95% pure silver. This coin right here is basically what trust looks like in physical form. When you held one, you knew exactly what you had.
Okay, now let's jump forward just 200 years. Look at this. The denarius is now virtually worthless. It's gone from 95% silver to just 5%. It's mostly cheap base metal with just a thin wash of silver on top. This is what happens after generations of emperors took that easy way out. What you're seeing is the physical evidence of a complete and total collapse of trust.
And this lays bare the fundamental choice that every government, every state faces. You have this incredible power over money. Are you going to use it to build and unify for the long term? Or are you going to give in to temptation, abuse that power for a short-term cash grab, and risk blowing up the very trust that your entire economy is built on?
And look, this isn't just some dusty story about ancient Rome. Not at all. The story of what happened to the denarius, it reveals a timeless problem. It's an echo that you can still hear loud and clear in our world today.
So what happened next? Well, the result was pretty much inevitable. People aren't stupid. They figured out pretty quickly that these new coins were basically junk. And that loss of public confidence, it's absolute poison for an economy. You're basically looking at the ancient world's version of hyperinflation. Merchants started demanding way more of these devalued coins for the same loaf of bread. And before you knew it, prices were just soaring.
So if you take one thing away from all of this, let it be this. This fundamental conflict, this tension between the state's need to maintain long-term trust in its money and the short-term temptation to just print more of it to solve an immediate problem, that conflict is one of the most powerful, most persistent forces in all of human history. The Romans battled this exact problem. Medieval kingdoms faced it. And today, every single modern nation on the planet is still wrestling with this very same dilemma, which really leaves us with one final big question to think about. How is that ancient conflict, that timeless tension between stable money and government spending, shaping the world that you and I are living in right now?